So a few months ago, the IMF reported and forecasted possible triggers for a global economic recession, that we are on the brink of something big, something that can affect the financial markets across all the different countries in the world. Then a few months later, today, Morgan Creek Capital is reporting that it's no longer risky, it's no longer weird, it's no longer out of the ordinary for wealth managers to put 1% or more of their capital allocation into crypto, specifically Bitcoin. Is this all related? Are we about to see Bitcoin jump up parabolically, or are we going to remember the gap and see Bitcoin fall a few $1,000s more into the halving? It could go either way, but we definitely have our opinions. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source in crypto and Bitcoin and what is happening in this world of blockchain, open blockchain, and soon to be central bank digital currencies coming to a local market near you. Now, it's been a little bit since I've been able to make a full-blown video, yet here I am. There's a lot going on in my life. A lot has been going on personally, professionally, all sorts of ways in terms of my world related to blockchain and my world related to, the world. And if you want to get more information about what's happening with me in my personal life, what's happening in our business lives, then check us out on Patreon or visit us on Discord or reach out in some other way that's not the YouTube, since there's definitely going to be a separation from everything I'm able to disclose with you here versus what I'm able to disclose outside of the YouTube realm. But with that being said, my heart is just as passionate around Bitcoin, open blockchain technology such as Bitcoin, Ethereum, and a lot of other projects out there. With that being said, I am hyper-focused on Bitcoin and hyper-focused on Ethereum, and I think those two are very, very interesting. And for all the new people in the space, for the people just getting involved, stick with the Bitcoin, stick with the Ethereum, because that is where the majority of the attention is on. That is where the majority of the cypherpunks are focusing. That is where the majority of the institutional investors are focusing. Bitcoin is the cryptocurrency that doesn't have one strong leader, even though, in a lot of ways, decentralization is a spectrum, and there's a lot of different ways that Bitcoin is decentralized, that open blockchain is decentralized, and across all those different points of attack, across all those different vectors of attack that a blockchain like Bitcoin could be attacked, each one is a spectrum of how secure it is. Each one is a spectrum of how decentralized it is, and each one is a spectrum in terms of the risk tolerance that you need to be aware of and that you need to mitigate for in terms of you employing best practices without being too complicated, that put you in the best position of where we're moving forward in this world of technology, this world of Bitcoin and open blockchain technology. And I'm super excited that you're here with us along the ride. So to get to the news over here, a few months back there was this report that came out that the IMF was forecasting triggers and the fears of a global economic brink of recession. Ray Dalio, other leaders in the financial industries are raising this awareness about all the money printing that's happening across the world, especially in the United States Federal Reserve, the amount of money going into the repo. Is that quantitative easing? Is it not quantitative easing? It's all really complicated. But with what's happening right now with the Fed, what's happening right now with money, a lot of money is being printed and a lot of money is entering the market. And what's happening is that when all that new money is entering the market, whatever they call it, whatever they say, it's an artificial money supply. It's new money that is simply created from the centralized levers of the world economy, of the United States economy, the Federal Reserve. They're printing this money, they're putting this money in, and that is having uneven balances with the way people look at the money, and more importantly, it's having uneven balances with the way people are looking at the system. They're recognizing that one side of the equation should equal the other side of the equation, but when there is just money instantly created and entered into the system in order to keep it alive, to keep it afloat, to keep it going in an upward direction, without these course corrections that traditionally Keynesian economic systems have on average every 10 years. And so things are out of balance and they look stable. They look like everything is going fine, just as it was going right up into the hour, the minute of the housing crash bubble, or whatever crash that we have had. Everything is fine until it's not fine. And a lot of people are looking at this, people in crypto, people in traditional markets, and everybody knows that this is uneven, that this is out of balance, that there's a lot of magic happening and mystery happening with why things are going so well, why they're propping up. And you might want to look at the economy and you might want to say it's because of the leaders of the countries, it's because of the president here and the president there. But we can't get past the fact that there are hundreds of billions of dollars entering the repo market that is simply being created out of nowhere, inflating those numbers. And at the same time, with unemployment numbers, there are so many people that are choosing to opt out of the system. They don't count those people in the numbers. So it seems like everything is getting better. And in a lot of ways, things are really strong because everybody is in this belief system that everything is strong. And so as long as everyone believes that it's strong, it's going to continue to be strong until it's not. And it's gonna hit quick. It's going to hit hard. And there's going to be levels of it. So there's going to be drops, and then it's going to sort of stabilize, and there's going to be drops, and it's going to be stabilize. And we don't know when it's going to happen. We don't know what is going to be the first shoe to drop, but we do know that there are a lot of variables in the market, and we know that what we should be doing is to be educating ourselves on what's happening in the world, what's happening with financial markets and global markets and politics and Bitcoin and cryptocurrencies. We should be educating ourselves. We should be learning more, and we should be preparing, making the best decisions based on the best practices that leaders in the industry, let it be the cypherpunks or let it be the wealth managers, to look at what they're doing to get ahead of the trends, because unfortunately, by definition, not everybody can be ahead of the bell curve. So with the IMF, they're calling for a growth rate cut. This puts the economy at the edge of recession. They're talking about this across all major publications. They're talking about it more and more on Bloomberg, on CNBC, on all the major mainstream media ever since the summer of 2019 going into the end of 2019. We've been seeing the stock market jump up a little, jump down a little. Bitcoin again outperforming almost everything, maybe except some Tesla and some anomalies in the market. But we're just seeing more interest in the Bitcoin as we're seeing more concerns about what's happening in terms of the money creation, what's happening in terms of the trade wars, what's happening in terms of the geopolitical politics, what's happening in terms of the weaponization of the US dollar, what's happening in terms of the more and more sporadic weather with climate change, the more and more flooding, the more and more weird weather that everyone is having. Maybe it's not getting warm or cold where you are, but it's the opposite. Things are out of season. Everyone is noticing it, even if they don't want to admit that this might be a big problem for the world. if and when the sea levels start to rise. But without diverging too far into that, there's a lot happening in the space, there's a lot happening in the world, and we're hearing the rumblings of it. Everyone is hearing the rumblings of it, everyone is having the concerns, and as long as the United States is printing more and more dollars, and as long as the banks are taking those dollars, distributing those dollars, and putting those dollars into the stock market, the stock market is going to continue to go up. But when we see a slowdown in growth, when we see a slowdown in the numbers, and when the banks are going to print more money, interest rates are going to go negative, there are not enough tools in the arsenal to keep the economy afloat and to counter these recessions that's going to happen. And the longer we delay, the higher we get, and the harder it is that we're going to fall. And so countries around the world are going to be affected. The United States is going to be affected. And, what we're seeing is more and more focus of Bitcoin, more and more of all sorts of institutions, not just people anymore, because people aren't paying attention because the majority of people think Bitcoin is a scam, it's used by criminals, Bitcoin is dead. These are the ideas that the media is perpetrating. These are the feelings and the thoughts that the mainstream wants to put your attention on. They'd rather have you focus on, the crazy things happening in politics or the crazy things happening around the world. We should be aware of political events, of global events, of health events. We can't live our lives in a state of fear. We need to focus on educating ourselves and preparing for the possible outcomes that can happen, not just keeping our minds focused on social media and in the news without actually taking preparation, without actually taking action. So those are normal folks, everyday folks who are not getting the story, who are not getting the news, who are not getting the information. But if you are a part of the asset allocators, the money managers, the family wealth managements, or the pension managements, or the hedge fund managements, you are looking at your total portfolio and you are recognizing how much money your portfolio has made. You're recognizing if your portfolio has done better or worse versus the average, versus the S&P, or versus the NASDAQ or the Dow. The amount of money that you're making percentage-wise, betting and guessing, trading, is your overall percentage of gains for the 2019 year, is it better or worse than the average? People are looking at that. That's the way that they always have looked at it, but now they're looking at the exact same numbers and they're saying, well, what if we had 1% Bitcoin allocation? What if we had 5% Bitcoin allocation? And the numbers are phenomenal. The numbers are huge because a 1% allocation of crypto would have dramatically increased the percentage gains for those portfolios. And that is because Bitcoin is very new. There is a limited, finite supply of this stuff around. On the actual markets, we talk about 21 million Bitcoin. Right now, there's only 18 million Bitcoin in circulation. There's probably 4 million of that Bitcoin in circulation that's lost, So, even if it was 3, that brings us down to 15. There's probably another 10 million in Bitcoin out there that is just hodling deep, cold wallets that can't even touch, that only leaves a few million actual Bitcoin on the markets that are actually available if people wanted to buy it. So the actual supply of total Bitcoin is much, much lower than people, the majority of people actually realize. And so, and so there's a limited amount of Bitcoin. It's a relatively very small amount of money overall that's into Bitcoin. Only about a market capitalization of 167 billion, $0.16 trillion dollars, $0.16 trillion dollars into Bitcoin, when there are quadrillions of dollars in debt, and just so much money, trillions of dollars in gold, billions and billions, trillions of dollars across the stock market, hundreds of billions and trillions of dollars across all the stocks in the stock market. There's a very small amount of total wealth that is allocated in just Bitcoin and just Ethereum, into just Litecoin, into just Monero. And what's going to happen is that as things shift in the world politically, economically, technologically, culturally, as things start to change all around us with our communities, with our cities, with our neighborhoods, with what's happening inside of our families, there's going to be more and more focus on Bitcoin because it is an open blockchain, because it is a protocol. People forget there are two different things called Bitcoin. We have Bitcoin, the open blockchain, and we have Bitcoin, the token. A lot of people focus on Bitcoin, the token, but there's this Bitcoin, the open blockchain, this protocol, this peer-to-peer connected protocol that allows any two people, organizations, computers, at two different ends without requiring this third party in the middle anymore. And that technology is what Ethereum is building on. That open blockchain technology is what Litecoin is building on. That open blockchain technology is what a lot of these technological advancements are building on. And the way that I look at this through the lens of what's known as Metcalfe's law and Zipf's law. And I recognize that right now Ethereum and Bitcoin have the largest communities. They have the greatest foundation of, not just with the token, but all of the people, the infrastructure, the process, that they have committed to these endeavors and to these projects and to truly integrating them into global networks has already been so much, and that proof of work and what's being created is so much that it's impossible to really kill a token. And so where we're at now, we're not talking about killing tokens. If one of these projects die because of a major error, it's possible that that can affect lots of projects. But with that being said, it's not about the tokens. What am I trying to say here? It's not about the tokens adoption so much, because adoption has already been created. The awareness has already been created. The people, the process, the infrastructure has already been created. So it's now here forever. And now it's about the continued momentum of those communities, of those networks, of those interconnected variables that are adding on to the network. And with Zipf's law, what that tells us is that one of these blockchains is going to be the dominant blockchain, and then the number two runner-up is going to be about half of the size as the major blockchain. And with all the infrastructure that's been there, no matter what you want to think about Bitcoin or Bitcoin Cash or Blockstream or a lot of the issues that Bitcoin may or may not have in today's day and age, the fact is there that this is here for the long term, that people like me and you are paying attention, and people at every level of culture and society are starting to look at this. Right now they're looking at it as 1%, but Bitcoin exposure in portfolios and wallets and homes is going to be increasing. And so Morgan Creek goes on to say here that if you would have taken 1% of all the endowments over the past 5 years, that would have been $6.7 billion out of $670 billion. You took that 1%, 0.5% from stocks, those bonds. Instead of making 7.2%, which is what they made, they would have made 9.2%, or 200 basis points better. And so that's a lot of basis points, when that's the cost of inflation right there. So if we were to hit a 2% inflation target, you're doing, automatically that much better with just 1% allocation, 1% risk. And so as they go on to say here, the idea that 10 years from now, we won't look back and say that as a fiduciary of a pension fund, sovereign wealth fund, family office, etc., that you have had exposure to this asset is crazy. And they want to be ahead of the game. They don't want to be left behind. And after they get their 1% in, and after they get their funds to hold Bitcoin, after they're personally holding Bitcoin, after their businesses are invested in Bitcoin, then the floodgates will open and more people will learn about this, and then they're going to want more and more people to have Bitcoin, to buy Bitcoin, and to spend Bitcoin, because that's going to be then pumping the infrastructure, pouring cryptocurrencies and essentially allowing them to take a cut off every single transaction, because now they have the foundation, they have the bags, and they're going to pump the shit out of these bags. So as Kaiser goes on over here, there's a quote from here that when you own Bitcoin, you're owning a piece of the protocol. And so with Bitcoin, you have the opportunity to own a piece of the protocol, and that's dominating it. You know, when the phone lines came in and there were the telecom companies, you could maybe own a piece of the stock of the company, but you couldn't own a piece of the power lines, and you couldn't own a piece of the infrastructure. You couldn't own a piece of the actual network. You could only own a piece of the company, which could be diluted, it could be sold, it could be broken off from the assets. With Bitcoin, with open blockchain technology, owning the asset is owning the protocol. And if you own the protocol, then you're holding the asset. And so these things are integrated, they're interconnected, they are the same thing. And this is just unlike anything that people have experienced before, and this is very, very exciting. We want to pop over here just to wrap this up and see where we are with the markets. We have Bitcoin over here floating around $9,200, $9,200, $9,250. Market cap, as we mentioned, 168 billion. So that's $0.17 trillion. 24-hour volume, 15 billion. That's a lot of volume. So we have our liquidity here at 300 million. It's not a lot. 300 million is not a lot. 300 million, the repo market just printed 300 million. Apple's worth $1 trillion. Amazon is worth $1 trillion. Someone could just, a billionaire could just drop 300 trillion. A country could drop 300 billion, or a country could drop 300 billion and just wipe out that liquidity if they were to do it on the open market. So, it's very likely that we're going to be seeing very big moves, especially as we get closer to the halving, which we're going to be having a party. So if you want to know more about that party, feel free to hit us up. If you're in New York, let us know. Western New York, not New York City. So Bitcoin, Ethereum, and other coins on here. We got Litecoin, Monero, number 13. Overall market cap, we see increasing volume, we see increasing liquidity, we see stable Bitcoin dominance, we see going down. This isn't just one blockchain is not going to win, in my opinion. Multiple blockchains are going to win, and the dominant one likely is going to be Bitcoin. And with everything that's happening in Ethereum, with Ethereum name systems, with Ethereum domain names, with all the decentralized finance that's put on Ethereum, for all the flaws that it has, for all the problems of it being possibly centralized, and with key management and all that jazz, it still has the greatest infrastructure and the greatest penetration into the our society, and in terms of the people that are working on it to push it forward to solve problems. Ethereum and Bitcoin are just where my head is at. Coin360, you guys can see like everything on a quick basis. The Bitcoin hash rate we see climbing. If you guys like charts, we can see this 100 equihash was acting as a ceiling, and now as of January 2020, we see it break that 100 threshold, and we see that that line sort of acting like a floor now. So it's possible that Bitcoin drops, and then this hash rate could drop more, or could drop again as unprofitable miners are taken offline. But miners are not going out of business. Mining is always going to be profitable somewhere. There's always going to be equilibrium. The miner market is its own little market, but it is interesting to see more and more money going into mining, and to see so much more mining come online, that these megalithic numbers with the amount of energy that's being used just continue to increase, and that security is directly going into Bitcoin. That proof of work, that energy is going to make Bitcoin stronger and more secure against any attacker that wants to focus and concentrate energy on rolling back those transactions. So the longer back your transaction in the Bitcoin blockchain, the more secure your Bitcoin is. So that gives you more reasons why you should break up your Bitcoin addresses and why you should, hodl, addresses for as long as possible. That makes that Bitcoin more secure. So just to underscore how little Bitcoin there is in the world, and how little Bitcoin you have, and how little Bitcoin I have, there's only people that have $100,000 in Bitcoin. There's only 136,000 addresses that have $100,000 in Bitcoin. There's less than a million. There's only 645,000 addresses that have more than 10,000 Bitcoin. It's not a lot. More than $10 million in Bitcoin, there's 1,500 addresses. Those could be, one person could have 100 addresses, but there's 1,500 addresses, at least 1,500 people that have $10 million in a Bitcoin address. And so if we look at these numbers a little bit higher, what we see here is that 95% of all the Bitcoin is inside an address that has at least one Bitcoin in it. So if you have more than one Bitcoin, then you're a part of this 95% of all the addresses in the world. What that means, though, is that if you have less than one Bitcoin, then you're part of the 5% of us plebs that don't have a lot of Bitcoin, that need to increase how much we're hodling, that need to increase how much we're saving on a daily, weekly, monthly basis, and then to be saving for our futures, saving for our retirements inside of a currency that, not financial advice, but personally for, myself inside of a hard currency, a currency that can't be devalued, a currency like Bitcoin. And so 95% of all the Bitcoin is inside at least one address. So 61% of all the Bitcoin in the world is, people have at least 100 Bitcoins. So it's just a phenomenal amount of money, a phenomenal amount of Bitcoin that's held by such few people. This isn't going to change the world in terms of equalizing, wealth distribution. This is just going to change who the new 1% is, right? The people who have this currency, if this currency goes up and relative to all the other currencies in the world, if they go down, these are going to be the new kingmakers. These are going to be the new, the new power brokers of the world that have, these vast vaults of gold, of digital gold, and it can't just be, it's going to be easy to transport, easy to move, easy to hold on to, and it's going to be, light as a feather versus the bricks of gold that some people have. All right, so with that being said, I want to thank everyone for showing up and for being here, a part of the video. Feel free to check us out over at mintingcoins.com. We're, looking into what we could do in the world and how we can make some additional moves, helping people so everyone can be minting coins, helping people so they could be dollar cost averaging into Bitcoin, spending Bitcoin, buying Bitcoin, all of that good jazz. If you haven't already, feel free to come over and follow us on youtube.com/mintingcoins. Come be a subscriber. We've lost a lot of subscribers. A lot of people have been unsubscribed from our channel. We were hit drastically. About 24 of our videos hit in a big crypto YouTube hubbub of everything that happened. All of those videos got reverted and fixed just like everybody else because of the outpour of support from the people that brought attention to that. We talked about that a lot, and so if you want to get more up-to-date notifications or news and what we're thinking about, what we're seeing, what we're syndicating in the world, make sure you follow us over at Twitter. Join our one Patreon supporter at patreon.com/mintingcoins. Any little bit of support that we get from you guys helps. Here's our Ethereum address. You could send us any donations or assistance to our Ethereum address. Also, you can access our Ethereum address through mintingcoins.eth. You can send us any sort of Ether or ERC20, ERC721 tokens to mintingcoins.eth. Our Lightning address, if that's your jam, is right here. And our Bitcoin address, that we've had here. So again, thank you very much. there's a lot of warnings that are happening, a lot of smoke that we are seeing and smelling inside the financial markets, inside the global markets. A lot of volatility with the news in terms of the presidential elections inside the United States and what's happening with the Democrats and the Republicans, and then the whole nation, and how that can affect markets, and how blame can be shifted when we all know that the world's on fire and the world's been burning since the world's been turning. While we don't like a lot of politicians out there when the SHT hits the fan. This has been happening since for as long as money has been created inside the United States. So check up on that reading. Check the Creature from Jekyll Island. Learn about money. Learn about Bitcoin, and learn about open blockchain technology. Eventually check out open blockchain wallets like the Trezor, which is 100% open source, as opposed to the Ledger, which is not 100% open source. But with that being said, there's a lot to learn, and I really appreciate you guys learning a little of it with me. So with that being said, until next time, let's keep on keeping on, and I'm glad that together we are minting coins.